Good morning. I want to welcome everybody to the How to Make Money Trading Stocks webinar, sponsored by the Active Trend Traders. Today, Mike and Michael will not be with us. Michael got hooked into doing something on an emergency basis for one of his clients, and Mike had to take care of some personal business with his dog. I want to remind everybody that all the materials we do present are for trading purposes only, and that traders should always paper trade any new method prior to the risk of their own personal capital. I want to welcome everybody today. We are in a very interesting market environment with a little bit of a downside bias right now. So it is kind of interesting what's going on. If Michael was with us, there's his disclaimer. I want to remind everybody that with the Active Trend Trader, training is so critically important, and we did a good session on Wednesday night about how to get ready for the end of the year, but also just a routine to get into about how to evaluate your trading on a quarterly basis so that you can make the necessary little fine course corrections while you're trading, while you are going through your trading campaign for the year, how to make those just minor little tweaks that can oftentimes can lead to big changes in the way that you trade and also your successes. This week we're going to be covering understanding the power of compounding. Mike and Traeger and I were talking this past week about that concept of, think about it. If a person could simply go for a 10% return on their portfolio every quarter, well, due to compounding, that would equate to about a 46% return for the year. But oftentimes we get lost down in the weeds and we don't think about that. That's what we're going to be covering on on Wednesday night. So let's get on to our market update. Last week we were talking about it. We're still, still in a holding pattern, but good individual opportunities. Same thing this week. The S&P that we're going to be taking a look at here shortly, it is still in its range that it's been in, which was the Fibonacci range. Hold on, please. It's still in its Fibonacci range that it's been in for, several weeks now. But it's looking kind of susceptible and kind of weak. We'll see what happens when it hits its support. The NASDAQ, will find support at, will support at the 50-day moving average hold. Right now it is hanging right there at it. The Russell's not waiting to break down. The Russell is already from this year's highs is down 5.8%. And so a lot of times when these indexes like the Russell or the NYSE, which is a non-weighted index, when those start rolling over, that's telling us, that gives us a better perspective of the health of the overall market, unlike with the NASDAQ and the S&P, which can be held up for quite a while because it has 3 or 4 or 5 of its bigger weighted stocks that are doing okay. And there's a tendency when the market kind of starts to weaken, there's a tendency for investors to push their money into the best performers or the biggest names, and so that helps pump up those individual stocks, holds them up, and therefore it appears as if those weighted indexes don't fall as quickly. And that's one of the reasons why we look at the stocks with the highest percentage weighting in those indexes, because all the stocks below them may already be falling apart, but when the biggies start to fall, that's when the S&P and the NASDAQ will tend to try to catch up with the Russell. So what are the outside influences? Next week, next Wednesday, the Fed reports out. It is their November meeting, and then around the 15th of December, they will do another meeting. The expectations are that at the December meeting, the Fed will raise rates, and going back to last December when they first raised rates again, at least every time since then when they have talked very hawkishly about raising rates, the market did not react well. Now what the market oftentimes tends to price in things, and so that's what we may be seeing a little bit of these days, is that one, the uncertainty of the election, and secondly, the expectation, the probability that the Fed will raise rates at least a 1/4 percentage point in December, and then overseas developments. These come and go. The overseas was fairly quiet this week, and so most of what we've seen is that just the reactions to the earnings. Some of the FANG stocks reported this week. As you know, Google reported, got a nice little pop-up, small pop-up. Amazon reported. Amazon got whacked. We have one more next, I think it's Tuesday, when the Facebook reports. So far out of the 4 FANG stocks, Netflix did well, got a really nice pop-up. Google did okay, got a nice pop-up, but still within its resistance level. And Amazon missed their revenues, I think, by about 30% and dropped like a rock. It was down about $40 today. But on a $700, almost $800 stock, $40 is about 5%. So it's not all that huge. So here's where we were last week on the percentage of stocks above their 20-day moving average. Here we are today. Now this snapshot was taken at about 9 o'clock this morning, and I will check this at the end of the day. What we may see, and as Mike and I have been talking, what we may see is that we may have actually pierced through the 30% line. And when this indicator gets down in this area is when Mike and I start getting interested in it, because typically within 1 to 15 days after it getting down here, the market will give a nice little reversal. Now we do use, with the early warning system, we use other proprietary indicators so that we can better time it a little bit. But we're looking for things when they get down in this area here. The big question I have going into the end of the year, of course, are we going to see a Santa Claus rally, which typically takes place sometime between mid-November through the mid part of December? And or will the inertia that is weighing down on the market hold it in place where the potential Santa Claus rally would be muted? Typically, your Santa Claus rally every year is going to pop, a single run, 5 to 15% on the indexes, which is a nice move towards the end of the year. But we'll have to wait and see what takes place with that particular move. So here's where we were as of about 9 o'clock this morning, and we can see the Dow is still down from its all-time high, the Russell down from its all-time high, and I can tell you right now that as of an hour, well, this is about an hour ago, 2 hours ago, that these results have gone down from where they were. Excuse me. They've gone down from that particular level. So let's take a look at the charts and see what's going on over there. There we go. About 10 o'clock, about 9 o'clock this morning, the S&P was hovering here about the 2128, 2130 level. And as you can see, we've continued to roll on over now, and we are sitting right on top of the Fibonacci, the 100% Fibonacci from this low to this high. And so there's a couple of areas I want to be cognizant of. One, if we break through there, what's it going to do when it gets back to this low? The S&P is in the process of putting in a series of lower highs, lower lows, and so by definition it's in at least a short-term downtrend. If we do fail at the 2119 or 2120 level, then where's our next potential levels to be? Well, one, you got the 1236 retracement, and you've got the 1618 retracement. Another thing that we can do here is we can also draw in a second fib, and this is nothing wrong with this, and it would go from this low to this high. There we go. And then that would give us a completely a new set of parameters. And as we can see here, what we have is the 123 is about in the same area. So that appears to be a very strong level there at the 2105 level. And then you've got a nice little, box down here that you can look at. It looked to be a level of potential support just above the 200-day moving average. As we look over here, is there anything on the left-hand side of the chart on the weekly chart that would tell us that the 2089 to 2082 level, is that a potential zone of support? And yeah, and we can see where it pushed up and hit into it earlier this year, bounced back down against it, and so that appears to be an excellent level for potential reversals. That's what we'd be looking for in those areas. Okay, let's get rid of, I'll get rid of this one here. And just leave the other in place, because this is also a reflective of potential areas where we could fall to. So that's where those Fibonacci's can come in quite handy. We know we are close to, the 100% retracement over here. Last time we hit that retracement, we did a quick bounce down and then a nice rally up over, about a week and a half's worth of period. And what we'll be looking at is is that level at the 2120 level going to hold, or is it going to be the 2114 level? Another thing that we can be looking at is if this move down has symmetry with the last move down, which would be about from here down to this low here. Where does that project us down to? Excuse me. I just swing this over to this past swing low there, and look at that, take us right about to the 618, just above it. And so that's telling us that if we maintain symmetry with this move down here, there may be some more downside, but it won't go down in one straight line. Won't go down in one straight line, but it'll bounce around that area. Eric says to, hold on a second, Eric, let me get rid of that drawing. Says to draw a fib from 623 to 627. Yeah, where Eric's talking about is, let's go over here just a little bit. Are you talking about from here to here, Eric? Or from well, there's, oh, I see, 623 here. Okay, fine. We can do that. It's amazing how these fibs seem to it. I think part of it is because the nature of the fibs is, as you can see, 100% retracement there, bounce last time. And as things start moving back up, we're in the congestion, which was the 123.6 retracement up here, or extension. And as you can see, we're right down at those same levels where that would expect that to be a even stronger level of support down here. Interesting. Let's go on over the NASDAQ. The NASDAQ. Okay. When we first looked at the NASDAQ this morning, it was actually holding above that 50-day line. Now we'll see where it closes the day out. If it in fact does close back above the 50, that would be an indication that 50 is holding. But like the S&P, the daily charts, we got a nice turn up, but then we hit this high, had some not really negative divergence, except some negative divergence over here on the momentum, but now it's rolled back over. It got a cross down to the downside, drop below the zero line, and as you can see over here on a weekly chart, with the widening of the difference between the slow and the fast TSI lines, that means you're getting some more acceleration to the downside. And also on the, there we go. Also, the momentum had been trying to turn up a little bit. Now it's bending back down to potentially take out an acceleration. We know we have strong levels of, my colors keep changing on me, and I'm not asking them to change. Anyway, strong level of support here at the 4,800 level, and so we'll see what transpires from there. A couple of ways we could look at this is it has basically, and here's the low that was simultaneous. If we hit that level, that would be your indication of we break through that, what might we go? Well, let's just do a real quick fib on the NASDAQ from this low to those highs there. And you can see the 1236 takes us right down to the 100-day moving average. The 1618 takes us down to a previous level of resistance, so that would act as support. And then finally the 2618 level, if we did blow that out, it takes us right back down to about the 4,500 level, which was in the past a good level of support and resistance. So we'll see how things play out with regarding their change of polarity. Let me get rid of that. Talk about a couple of other things. One is on this initial pull down, we got a slight break of the 8-day breaking below the 20-day, but then we popped back up, got back to the old highs and actually set a new high. However, the moving averages did not move much above where they were before. In fact, the 8-day didn't move any above where it was, and now it looks like it's appearing to roll over again. With the S&P, it has been following and obeying the support resistance of the moving averages, and so that's a good thing to be aware of. And we'll see if the same thing starts to happen with the NASDAQ as it continues to roll. Now, from where we sit right here, true stance indicator below the zero line, momentum below the zero line, that's indicative of at least going into a short-term downtrend. Will the downtrend just be these several days where we're doing this pullback, or will it equate to more? And that's what we'll be waiting to see. The market may in fact going into next week, because the Fed is on Wednesday, and although nobody expects the Fed to raise rates this coming Wednesday, prior to the election, because there's already enough bad news coming out there about the election with, I hope you're not one of those states where Obamacare went up over 100%. But to have the the market also tank prior to the 8th of November, that would be not a good thing for the incumbent party. So or at least historically, it has not been a good thing for the incumbent party. Now the Russell is clearly in a downtrend. Lower highs, lower lows, broke through this particular low right here. And if we take a extension of the trend line that goes from this low up to the previous highs here, and we grab that and pull it down to where it broke that level, which is about there. That puts us down. That puts the Russell down at the 618 retracement, still within its good fib box, and there's pluses and minuses to a correction like this. One is that the further it retreats, oftentimes the more froth that gets taken out of that particular index, and then it has a good chance to give it a really nice profitable rebound. And so in the 618, good target area if we break through the 50. I mean, it's got to break through the 50, and the 50 has been, a good level of support in the past where it came up, stopped, and then took on off. But that's what we'll be looking for on that particular one. But it is definitely much more negative. And if the Russell on a weekly basis, keep an eye on this, the last time it went into a significant rollover, the weekly TSI got way down here and almost buried at, below the negative 25, approaching the negative 50. The momentum got down to an exceptionally low level. If the momentum and the TSI are to reach the similar type levels, we just basically draw a straight line down from there to approximately there. Again, this is estimates. Where does that put us as far as a time frame for that happening? Well, that puts us out in about the middle of November. So that may be an indication of when we could anticipate or expect a potential turnaround, or at least if we had time symmetry with the oscillators, that would be approximately where we would anticipate a potential, bottoming period. How far would it bounce from that? We haven't got a clue. But like I said, on the weekly chart, things are not looking too healthy for the Russell. Are you considering to short the RUT? We talked about that, Eric, on Wednesday night. Mike actually went in and he actually bought some SQQ on the day on Thursday, and he was telling me that that's doing very well for him right now. But I don't know if I would short the Russell or the IWM, or go and take a look at TZA and just trade TZA off of that. As you can see, TZA has come in and made a nice little bottom, appears to be rolling up, and at this point, given our rules, any retreat back to, back into the moving averages might be an opportunity to buy for a swing up. Yeah, TZA was a very classic case of it came down, made a lower high, a lower low, however had nice divergence on the TSI, and from 25 to 26, it's made a nice little move of about 20% over that time frame. Yeah, the weakest is the Russell, without a doubt. Second after that, the S&P. But the S&P seems to be still just cooking within that, within its range. It's range bound. Any other questions on the? But I'd be looking at potentially trading that, especially if we get a nice little another pullback into the moving averages. You can draw a little flag or just take it right off the moving averages. A little bit extended right now from its moving averages. Same thing over here. Here's the 8-week, which is the 50. And okay, any other questions on the indexes, folks? One thing about when when Mike or Michael isn't on, time goes a little bit, or not as much is discussed, and so time goes by a little bit more quickly. So gives us a chance to look at a couple of stocks when we're done here. Okay, no other questions, and let's move on. Okay, currently path of least resistance. Path of least resistance appears to be down, or at least down, sideways with a slightly down, downward bias. I'm watching this particular sell-off. I'll be spending a lot of time this weekend taking a hard look at it from the aspect of, okay, what's it trying to tell us? Expect that first at least 2 to 3 days, well, through Wednesday morning next week, that the market will probably go into a holding pattern. If the words coming out in the Fed statement are, even if they take no action, but if they're perceived to be too hawkish, that also may spell some problems for the market. So path of least resistance. It appears as if, and I'll go back and just show this one more time on the, I'll go back to the index here, the Russell. It shows up very nicely on the weekly pattern. So we had a nice, just a rounded type topping formation that is now dropping. How far is it going to drop? We don't know at this time, because it'll get its initial plunge down. It will get its initial plunge down, and then our determination is, okay, what happens on coming back up? If it rallies hard all the way back up here, but if it weakens and rolls over prior to reaching its past highs, that's an indication that, yeah, this market is definitely continuing to weaken. So right now I'm kind of in a camp that is along this area here with a little slightly downward bias. Longer term, at least going in the first part of 2017 or the middle part of December, when if the Fed raises rates, I think we'll get a really healthy correction, which will, like I said, get rid of some of the excesses. And the market's going to have, no matter who gets elected, the market's going to have to determine how the policies that individual person or that individual candidate, how their new policies will impact the market. So the market, as it's digesting, it may take some time for it to digest. Okay, folks. So, okay, here's where we're sitting this week. Strategy 2, we got bumped out of 2 of our pre-earning trades. Well, no, this was actually the Google pre-earning trade. We got bumped out of that, closed out, had a time stop on that, got bumped out of a couple of we're still up for the month in our strategy 1, up for the year, but we got bumped out of the BGS and the GIMO trades for a small, less than 4% loss. And our strategy number 3 basically made about $100 this week. And so, but it's been a slightly profitable week. Here's where we're sitting for the year. And we'll see what happens on Monday, how much more I can close this gap to get it back up towards the equity curve that is basically shoots up to the 40% that I target on a yearly basis. The second Tesla trade, we closed out the first Tesla trade that we opened in September of last year for 100% gain. I wanted to show, this is strategy 3 that we do, and basically the second Tesla trade is doing well also. We opened that on June 6th, and so that's been about 20 weeks that we have been selling premium against this. We're hitting about a 75% win-loss ratio. On average, drawing in $307 per week, which equates to about $12.58 per month. The big thing this week, what happened is our cost basis for this particular trade went negative. In other words, we've made up with the premium that we've collected. We've made up the cost of the $5,890, and we have a return now about a little bit over $6,100. So our cost basis is negative, and combining now this option will expire. I think it's the 20th of June. The first option period in January, of 2017. So we may be looking at to move something out to 2018 on Tesla if we can continue to count on Tesla. But with the with what we've drawn in a premium plus the residual value of what is still in the particular long options, right now we've generated about 64.6%. And so again, I'm really enjoying this particular strategy, especially on things like Tesla Nugget. I'll be highlighting on Wednesday night a little bit about, and also in the next session with the final hour session, the process that we've gone through with the spiders. The spiders, basically, they're this same similar type of strategy. On the spiders, only up about 30% since the position was open, and it was open in January of this year. And so, one of the things that has kept that from doing as well is the volatility has been just stuck at kind of like all-time, historical lows, and so we're not getting generating quite as much premium on a weekly basis. But even holding it, even if we hold it through the end of the year or into January, a 30-35% return on it is going to be, that's going to be fine. I'll take it. So this is one of the strategies we focus on, and then we have 2 other strategies. But future presentations, those of you who are in the Bay Area, the BAM meeting, the Bay Area Moneymaker meeting in November 5th, it's going to be Lee Tanner. He is an excellent IBD trader and former Navy guy. Used to be a nuclear engineer on board a U.S. nuclear submarine. Training on Wednesday night, Plan for the Power of Compounding, and then we've updated and put in some videos for premium members, how to do strategy 3, timing entries, and more. You can find those in the training sections. And then a couple of the improvements we've done with the active trend trading itself for premium members is, one, we've been getting out much, rather than doing a full-blown market analysis several times during the week, what I've been trying to focus on is just the, potential trades coming up for the following day. Had good reports back from that it gets the information to everybody in a much more timely basis for them to make their own personal trade decision about a potential setup. Then final hour trade setups, we've done 2 of those, and also good reports on those. Any of you folks have been on that session on Friday? Is it working out for you pretty good? Okay, great, Gary. Oh, thanks, Karen. Okay, so that's what we're working on currently. And so just want to remind everybody the active trend trading system that I've developed with Mike as my research partner. We focus on the 5 pillars of active trend trading, what to trade, and we focus primarily on top quality IBD stocks and index ETFs, and occasionally an occasional I'll take on a stock like Tesla because of its repeatability on how well it does. And how predictable it is, and we provide when to enter, when to exit, what strategy we're going to use, and what to expect. I'm very much a proponent of your process must be based on a good, strong system. And then on top of your system, once you get the system down, then you can start adding in your strategies. We spend 70% of our portfolio over here on the stocks. This is the portfolio building portion, 10% on basic option, and about 20 to 25% in the wealth bit on income. This has been a real challenging year, as you know, to build a portfolio, but we're positive for the year here. But this wealth building, this weekly income that's been coming on this has been, a really has really helped the returns for the whole thing. So anyway, so that's all I got for this week. Any questions? Well, keep the egg growing, and if you're a premium member and have signed up, we'll see you the next, we'll see you at 12 noon Pacific time. And right now I've got time to take a look at a couple of stocks. So we've got, let's see, I know somebody put in a stock on the IBB. So let's go over to the charts. Excuse me. Okay, IBB. As we covered a couple of weeks ago, IBB is basically in a trading range. It's got a couple of levels. It's got this level here, and I would like to say this level here, but it's breaking down through this, 260 level. So I like it down in the 240 level, and then it's got kind of like this and this as a resistance area. Now that's a nice tradable range, and to be on the safe side, I don't want that. I must be clicking something here. We also have this level across here that can be, but this is a huge range. I mean, 240 up to let's say almost 290, and so that's that's a $50 range on this. The thing that is critical though, as the weekly chart, is waiting for where are you expecting it to bounce back up off of. As we see, the daily chart has continued to fall. And so this is where I'm interested. I would, right now, yeah, Gary, was it you who asked about IBB? Okay, yeah. Right now, I would basically be highlighting down here in the, I put an alert down here about 250. And when it triggered off, then that would tell me that it's time to start looking at it. And so that's where that's what I would be looking. And then I would check it on a daily basis. This is one of those you can check on a daily basis to see, if it is going to get down into this 240 level. And I put another alert down here at 245, and then one just about 241 or so. And so you want it, and be patient and wait for it to get down here, because when it gets down in the 250 to 240 level, it tends to want to bounce. But right now, as you can see, it's just selling off. And I know it was really a temptation. I know you trade this a lot, but it was a real, a big temptation to jump on that here, just within the past, couple of weeks when it got down here to the 265 to 260 level, because it looked like it was going to reverse there, but then that failed and has dropped on down. Appears to be like it's going to run down to between the 250 and 240 level. So that's where because this one's on my watch list too. I'm watching it closely. Okay, what else we got here? Let's get rid of those drawings. Okay. Wow. Creighton Corp. Okay, disappointing earnings. Bounced. That's the 200-day moving average. Is it going to bounce off that 200-day moving average, which also the 200-day is at, support, strong support from, past years, the 25-21 level. And so that's the big issue right now. This particular, stock could provide from the 25 level, could bounce back up all the way to the 30 level or the 28 level, which would be a good 9 to 10%. No, I wouldn't call that a bearish harami at all. Yeah, I take that back. I'm just sitting there. Yeah, it's the body at this point for the day is inside this body. So yeah, you could consider it a bullish harami. However, I wouldn't call it a high quality bullish harami simply because of its location. Now, if it were up here more towards the middle or larger, I would call it a higher quality bullish harami. Okay. Okay, with ACI Acacia, I would be looking right now on Acacia for opportunities to short it, but we do have earnings coming up on the 10th of November. And what we may be seeing here is somebody may be knowing, somebody may know something regarding what's going to happen on earnings, and that's why we're getting this, because there's a significant sell-off. I mean, very high-level sell-off, and it has dropped down through that's the 100-day moving average, because it doesn't have a 200-day moving average yet, but it is approaching the 40-week moving average, which equates to the 200. But it has continued to weaken for the last 5 weeks, and this is the biggest down day, or biggest down week that it's had so far. And so sellers are definitely in control of this particular one. Big China customer did not meet earnings. Okay. But right now, to me, I mean, okay, this is our clue when it couldn't break back up through the 8-day. That was telling us this is a weak stock. Just, be aware of that. So I'm going to do NVIDIA. Hey, Barry, how you doing? Okay. NVIDIA, nice uptrend. It's in the process of a pullback. And I would say we would be waiting on the pullback. Earnings on about 11.10. Which, if we can get a pullback into because where's it's pulled back before? Actually, it's pulled back close to the 50. So if you get a surge down to approximately somewhere between the 20 and the 50 before earnings, you may have an opportunity for a pre-earnings run. But that's where I would look at it. If you already own the stock, it's, depending on where you bought it, you may want to, have taken a little bit of profits off the table. Okay, you do own it? Lots profit. Okay, sure. But, you know, basically, since you tell me that, then you've got a couple other things to look at. Is one, depending on where you bought it, you've got, okay, there we go. We've got this trend line going here. You can either draw it there. Well, it's pretty good right there. As long as that trend line remains unbroken, it's going to remain and stay in its uptrend. Second warning is if the 50-day is broken, but with a 50-day going up that strongly, oftentimes it'll come down and test it a couple of times. If it breaks through it significantly and then pops back up, that's where oftentimes it's telling us that the price action is starting to hammer over the hammer down the moving average to slow the rate of ascent. Last thing I'll just point out to you is that a little bit of negative divergence on the true strength, a little bit, you know, some negative divergence definitely on the momentum, and longer term, we've got some negative divergence, significant negative divergence on the true strength indicator and on the momentum. So as this is pushing higher, the weekly momentum is being pulled out of this stock. So there's not as much vigor in continuing to push it up. I hope that helps, Barry. Okay, guys, well that is my alarm to get ready for the 12 o'clock discussion for premium members. And so I'm going to say have a great weekend. Enjoy yourself, enjoy your families. God bless everybody.